Welcome to Commodities, and here we're looking at gold. And yesterday we were looking at this particular pattern moving up through here, and possibly a retest even higher, but it wasn't the case. So it's moved down in line with the larger wave count that we've got through here. But what I also wanted to point out too here is that this count in here is a little bit sort of messy in here, but it also counts quite well as wave 1 here, and having wave 2 pull back to its 50-60% retracement level from here as well. So just want to pop that in here because in the other aspect of this as well is that that we are working with group 2 here, so the 1280 and the 1272. And the 1272 is quite important and be a strong level, maybe not right at the word go, but as a pattern develops in this space, then it will become just as important as the 1300. So if this is, we've got a clean 5 waves down through to here, so that's fine, and we're looking for the retracement level. That was quite low too from memory, and then this move down through here, if this is 5 waves here, then we'll be looking for the 3 wave correction back into this space here, and maybe even up here in an extreme sort of place. But so if you're shorting here, I guess the important thing is to realize that there is a wave count sitting here that can retest the 1300, probably not that far up, but the other point is that this group 2 area here, this is normally where the retest of the closest largest number, in this case 1300 here, would come from the group 2 area through here. If the 1272 became the retested resistance, then you're on your way down to the 1250, which is the which is quite a strong support actually, and probably a good target sort of area as well. So just looking at this little structure in here, I did pull it apart. I have pulled it apart here. So from the wave 2 up here, I suppose these should be the next degree smaller, but what I was looking for here is basically, I know it's a bit rough, but 5 waves down here for 1, back for 2, 5 waves down here for the 3rd, the 4th, which gives us overlapping wave structures, which is not correct, but that's what occurs around large numbers, and especially with derivatives as well. So then we've got basically 1, 2, 3, 4, and 5 waves down here, which would make wave 1, wave 2 to come back, wave 3 here, nice and strong, and then the complicated wave 4. So it's really, all of these have got the right personality for their structure here. So, we could certainly see this come back up in retesting the 1290 area here at minimum through here. So look, I just thought I'd point that out. So if you're longer term short rather, then you really need to keep your stops, above the 1300 here. I did mention in the report you could technically put them here, but with this particular count that I've got here, that's not the case. So just forget about that. This move up, we could still have a bearish picture, and the bearish picture would be, a smaller time picture would be this move down through here in 5 waves, nice 3rd wave here, 4th and 5th here. The 50 and 61.8 retracement level is back up at the 1286 mark here, and you can see that this is the resistance area through here. So if this was going to move back up to here, this is where it would fail from here. So if the 1287, 1288 become the support, then that it will be going higher as such. And so far the trend does appear to be in 5 waves going up, because this here is corrective here. So we could look at this in terms of, my drawing tool's gone again, which is a bit annoying. So up for 1 here, back for 2 here. All of this would be 1, 2, 3, 4, 5, the 3rd wave here, the 4th wave here. So if we make a new high above here, that will be 5 waves all the way through to here, okay? So at 1286, 1287, maybe even a bit higher, but up here somewhere you would see an A and a B and a C, and then you'll see another 5 waves up here, and this 5 waves up here would be much the same length as this one here. If this fails to make a new high here, then we've got an A wave, a B wave, and a C wave here, and you could short that low taken out at that point there. The copper market is strong because it's still above the 300 here, and I was sort of looking at the wave count now as the move up through here is the A wave, then the A, the B, and the C here for the B wave, and then looking for a C wave higher through here. Normally the C wave will have some sort of relationship to the A wave here in terms of size and distance, so we could see further up here, but all we need technically is 5 waves, and we've got 1, 2, well, spike here, forget about the spike, the 1, 2, 3, 4, 5, yeah, it's still got higher to go here. Look, as long as that 103.02 stays in play here, as I mentioned before, then this market is bullish. And also want to point out too, just in the commodity index here, this is not the CRB, but this is the Dow Jones-Ubs commodity index, and the CBR in this one here are same. They might have a different basket of commodities, but they are a basket of different commodities in terms of, grains and metals and so forth. And this is a weekly chart here, and we've looked at this many times before, just not for a little while. And this whole move down through here, we were looking at this in terms of, and I won't go over it now, but we were looking at this in 5 waves here, and that is correct. And we'll also counted all the 5 waves down to this point here, wave 4 here and wave 5 here. So we basically picked the low here and expected the commodities to jump, and that has been the case, and that's partly why we've been trading the grains to the upside. And this move here, this is in weekly. I just want to put this in daily chart now, and just sort of drill in here a little bit and just sort of pull this apart, because we don't have it yet, but we do have an impulse wave panning out through here. So we have 5 waves in here, and then we have the third wave here is not complete. It's actually I have to put that up there for a moment. I have to pull this back to here and to here and here. This is just the third wave that's not complete just yet, because in this wave 1 here, wave 2 here, and then in wave 3 here, we can see we've got 1, 2, 3, 4, and 5 here. So this is just the third wave in here. So we've got 1, 2, 3, 4, and now we're heading into the 5th wave of the third wave. So in here there will be 5 waves in here, so we still got a bit more to go here, but that that will give us, in the bigger picture, from this low here, that will give us 3 waves up, which is corrective at this stage. But if it turns into 5 waves, so we've got 1, 2, 3 to here, and then we'll get, if we get wave 4 here, and then wave 5 up here, probably in this little area here. If we do get these 5 waves here, 1, 2, 3, 4, 5 here, then what happens is that we get a corrective move. That's an impulse wave up and an ABC here, which makes all of those waves, 3 here and 5 there, is called a motive wave. But the simple fact that we get 5 waves here means that we're going to get another 5 waves over here, right? So that means, in the bigger picture, if I can come back to the weekly chart here, just to make it a bit sort of tidy, is that you can see that if we get 5 waves here, then we get 3 here, and then we get another 5 over here. So basically, a strong commodity market into into the year ahead, and of course this move up through here can be in 3 waves, or it can develop into 5 waves as well. So if it develops into 1, 2, 3, 4, and 5, then we're going to get another 5 waves after this 5 waves. So one impulse follows another. So yeah, look, just a bullish perspective for commodities, but that, like I mentioned, they're all sort of bunched up there with different commodities. The oil market's fallen out of bed, and moved out of its channels. So we need to look at it being an impulse wave. Where it is at the moment, or just below this, is at 61.8 retracement level. So there will be support. There will be support on 101 here, and also, you know, bouncing around 102, 101. But it does appear that we've got an impulse wave down, and we'll be looking down around the 98 here, but there will be plenty of support at 100, as you can imagine, and also here as well. So what you see here in this strong third wave is not what you're going to get over here in a series of fourth and fifth waves over here. So, but further to move down. The gas market. This is the June contract here. The May contracts for a lot of these commodities are going to be finishing soon. So I'm going to start bringing the June contracts in, starting a little bit today, but mainly tomorrow. The move here on this is the daily chart on a May contract. What we have recognised is that the move down through here is corrective. The contracts before this had touched $5, and the ones before that were above $5. So not that it makes any big difference at this stage here, but what I do want to point out, and why we've been long in this, is because this here is a corrective move, and we'll see new highs above this one here into the $5 area through here, and being above the 472, or the simple fact of traveling a lot of distance here and getting into group 2 here on the second time round is a very positive step, and we'll see further upside there. I was expecting on the intraday a bit more of a retracement level for wave 2 here, but that looks like sort of it done and dusted. While it's above the 72 there, then it's strong, but it could still be an A wave, a B wave, and a C wave back into this area through here. But anyway, as you can see, it's positive to the upside, and will continue to move up there. The soybean market will change over to the June contracts probably tomorrow as well, but there's a lot of difference in the prices, so to speak. But look, one of the main points here is that we were pegging this top in here to be the fifth of the minor wave 3 here, and minor wave 4 would pull back to the fourth wave of 1 lesser degree, which is below the 1400 here. I don't think that's going to be the case, but our main objective here is to allow the first leg to unfold here, and we've got 5 waves in this first leg here. So not that this first leg is finished, but if we do have 5 here, we can be assured of getting a bounce off here, and then getting a bounce off, coming back and checking the 1500 or even a tad higher, and then moving down again. So we're still in the very early stages of the corrective move as such here. So I think yesterday we were looking at, we had this 1, 2, and 3 here, which could have been the A, the B, and the C. We know it's not the A, the B, and the C anymore, because you can see 5 waves, 1, 2, 3, 4, and 5. So there will be a count. Looks like there's 5 in here as well. So the market will be into oversold territory here. So we can expect an A and a B and a C coming back up here, and then further down as well. So yeah, so look, it's nothing to do here for the time being. The wheat market, it has covered our little gap here in terms of the 660 here. We're still in the long trade here, but this move down through here has moved down a bit too far for me to be comfortable with, and moving closer to the 650 here which can make for a larger correction across this whole area here. We've talked about this here. We're looking for wave 1. We were looking for wave 2 to be here. The problem with that is that this hadn't stuck onto it hasn't really broken any rules as such, but it's just likely that we need to shift to a bigger wave 2, which would be over here somewhere, and the 61.8 is down around the 630 here. So this is likely to be a corrective move in here with further downside to come in here, unfortunately. We may just get a move into the 650 here and then bounce off from that point there. So I know we've got stops at 655. Realistically, they should be at 646. So if you want to change them, then that would be a safer bet and a logical thing to do as well. If you've got too much in there, then just half the position now at 672. Okay, the corn market. Okay, this is sort of interesting, and we just need to be on our toes here and not get lost in the correction. We were looking for the ABC to the downside, which would make a flat correction, and a flat correction means that, well, flat would stay within the high here and the low here in terms of its swing across. So an A wave, a B wave, and a C wave here, and then we move up through here. Now, we've also got to be careful too that we could have a bullish picture coming into play, and that bullish picture, because this is in 3 waves here, this market can move straight up and make new highs here, and then we would have to put this A wave over here, this B wave over here, and this C wave over here, and wave 2 into place here. That's a real possibility, so we need to be mindful. I mentioned yesterday that you can buy off any bounce off the lows here. However, what we will do, if you haven't bought positions, it doesn't matter, and we weren't supposed to, it was just a afterthought, but we'd be looking for support on 500. We'd be looking to gain, we want tested support, so we'd be looking for, this is how the correction stands so far. So we've got the A wave, the B wave, and the C wave to here. Wrong labeling, but so the B wave would be 5 waves up for the A wave, back for the B, and up for the C, and then failing at this point and moving down. But if it doesn't fail at this point here and develops a really strong support there, then I think that we will look to get one position, and if that position pans out and the market continues to move up, then we'll look to add on 505 and 510 there. So that will be our plan if we if that unfolds. The coffee market. Okay, just on the 4-hour chart here. So what we're doing here is that we're looking at 5 waves up from the low. So the 1, the 2, the 3, the 4 to here, and we need to look at this as the 5th wave now. So the 5th wave would take us to new highs, and we need to be counting 5 waves up from this low here. So the 1, ABC for 2, the 3rd, the 4th, and the 5th wave up here to make wave 1. And then we'll be looking for a corrective move back in here. So this is what we're looking at here. So in this case here so far, we've got up for 1, back for 2, up for 3, back for 4, and we're looking up for 5 here. So this would be 1, 2 in here, 3 and 4 and 5. So we're looking for a sort of move into the 220, 218, 220 area through here. I have to point out that if I was wrong and this market continued to move up, then we would be looking to catch it on 230 support and maybe even the 220 support. So we'll be looking closely at that. I mentioned yesterday to buy off the 200 support area. If you've done that, then just hold that position long for a little while, and you may be able to add to it on top of the 220 and 230 if the market continues to run to the upside. But we'll be looking for failure into 218 and 220. Otherwise, you can sell at 220 and can always get back in. Alrighty, sugar. So sugar's getting into an interesting position now, and I know lots of squiggly lines through here. If if I can just find the, look, bottom line here, if you've been following this, if we get support on $17, then get a position. If support comes in on 17.20, get a position, and the same on 17.30. You can get one on 10, 20, and 30 if you've got a nice support on the $17 here. So there'll be more fluctuations around this number first. So it's kind of, you got to use your common sense to see if it's been, actually tested on there to get that, to gain that support. But a long trade brewing up here quite nicely. The orange juice is on track, still taking its time, but has moved up through the 165 again here. This is definitely corrective across here, so we will see further upside here. And the thing is, the wider the correction, which is the accumulation phase, then the safer the next trend, or longer the next trend. So as Richard Wyckoff would say, he would take the distance across here in time and convert it directly into prices as unit for unit. So we could see this getting up to the 170, but our target, as you know, has been the 172 there. But there will be problems at 168, profit taking, 170, and a larger problem at the 172 area through here. But all on track, and once again, a typical fourth wave through here. So, yeah, all good. Alrighty, thank you.